The Subcommittee on Commerce, Trade, and Consumer Protection will come to order. Today's hearing is a hearing that we are anxiously awaiting to conduct. It's a hearing on consumer credit and debt, the role of the Federal Trade Commission in protecting the public. The chair will yield himself 5 minutes for the purposes of an opening statement. 3 weeks ago, the Subcommittee on Commerce, Trade, and Consumer Protection held a hearing on abusive credit practices in the used car industry. Today, I want to expand our inquiry into the world of consumer credit and debt in general. For the past decade, if not longer, American consumers, particularly low-income Americans, have been swimming in shark-infested waters. Whether it is subprime mortgages, auto loans, or payday loans, too many companies have had a free rein to saddle Americans with debt that they simply cannot afford. They sold their snake oil by taking advantage of people's circumstances or with outright deception. Unfortunately, there wasn't a strong enforcement or regulatory authority at the federal level protecting consumers from these abusive practices. The result has been a wrecked economy and, I might add, wrecked lives. The purpose of today's hearing is twofold. First, I want us to examine the actions taken by the Federal Trade Commission in cracking down on abusive credit practices. The FTC has broad authority under the FTC Act to enforce against, I quote, unfair or deceptive practices or acts, end of quote. How was this broad authority exercised is one question that we may ask. If the Commission took insufficient action in the past, then why was that the case? Is another looming question. Was it political will, or was it because the Commission lacks sufficient statutory authority and resources? Is a third question that we should explore. Second, in this hearing, I want members of the subcommittee to deliberate on reforms that Congress can initiate to make the FTC as effective and as possible in protecting consumers from abusive credit and debt practices in the marketplace. I am working on legislation that will better equip the Commission to aggressively address abusive lending practices. How can we utilize the Commission's historical authority to prohibit and enforce against, again, unfair or deceptive acts or practices to our advantage? The FTC is America's foremost consumer protection agency, and we need to take advantage of its historical authority by enhancing the Commission's underlying regulatory and enforcement powers. I believe the basic cornerstones of a consumer credit protection agency are already in place, but some reforms are more than likely necessary. Does the Commission need more resources? Should the Commission be given regulatory rulemaking authority under the Administrative Procedures Act to replace its current burdensome rulemaking process under Magnuson-Moss? Should the Commission be given additional civil penalty authority? If the FTC has one hand tied behind its back, I believe that we should untie that one hand. But if we do so, we must be assured that the Commission will aggressively utilize these tools to protect consumers to the fullest extent. Today, I want to explore how the FTC can be equipped to adequately deal with not only today's abusive practices such as subprime mortgages and payday loans, but also tomorrow's unforeseen snake oil that will be sold to the consumers in the future. And I want to congratulate and welcome the new chairman of the FTC, Mr. John Leibowitz. I've had an opportunity to meet with him, and I find him an outstanding and fine gentleman, and is a dedicated public servant. And this is his first appearance on Capitol Hill as chairman of the FTC. And I hope that this hearing today will be first in a series of constructive hearings. As chairman of this subcommittee, I want to have a constructive relationship with Chairman Leibowitz and with our friends at the Commission to ensure that both Congress and the FTC are doing everything we can to protect the American consumers, particularly poor American consumers, from the unfair, deceptive, and abusive practices that are far too prevalent in the American economy. With that, I yield back the balance of my time, and now I recognize my friend, the ranking member of this subcommittee, the gentleman from Georgia, Mr. Radonovich, for 5 minutes for the purposes of opening statements.
Thank you, Mr. Chairman. I want to thank you so much for holding today's hearing on the FTC's role in financial consumer protection. Given the current economic downturn and the slow thawing freeze in the credit markets, this discussion is particularly timely. Abusers must have the disinfectant of sunlight shone brightly on them, and it is our responsibility as representatives of our constituents to examine the protections afforded to consumers by the law. Any credit scam that takes advantage of innocent consumers is deplorable, and we must have our regulators pursue all those responsible for this kind of despicable crime behavior with vigor. My district is located in California's San Joaquin Valley, which is suffering from one of the nation's highest foreclosure rates due to the easy availability of credit. Unfortunately, some of the easy money was available to consumers because of deception and fraud. These were cases of mortgage fraud, appraisal fraud, and income fraud that all played a part in creating the current mess that we're in. It is reprehensible that people who may have been taken advantage of when they bought their house could now be victims in their time of need. Today, we focus on the Federal Trade Commission's efforts. The FTC deals with matters that affect the economic life of all our constituents. The Commission's consumer protection mission is to ensure consumers are protected from unfair and deceptive practices in or affecting commerce. That Herculean task puts the Commission in the position of overlooking a multitude of industries, and the Commission's responsibility to protect consumers of financial service products are a critical part of this work. The Commission helps to protect consumers at every stage of the consumer credit market, from the advertising and the marketing of financial products to debt collection and debt relief. However, the Commission's legal authority does not extend to all entities that provide financial services to consumers. The FTC Act and the statutes the Commission enforces specifically exempt banks, thrifts, and federal credit unions. The FTC, however, has jurisdiction over non-bank financial companies, including non-bank mortgage companies, mortgage brokers, and finance companies. As a lead consumer protection agency, it has the expertise and the experience that was recognized by our colleagues on the House Financial Services Committee last Congress. They developed legislation to improve the existing framework of the consumer protection regulations to better coordinate banking regulators' rulemakings with those of the Commission. And while avoiding duplicative efforts in the government, this coordinated approach to protect consumers of financial services is essential. The same rules should apply regardless of what entity sells the product. I'm anxious to hear about the FTC's recent activity in this area, the cooperative efforts among agencies, and whether these efforts are effective. I do have some concerns about some of the reforms that have been discussed over the years that would change how the Commission operates. As I mentioned, the FTC's jurisdiction is enormous. Except for the few exempted entities, the Commission's authority to promulgate regulations impacts nearly our entire economic spectrum. Unlike some other agencies who promulgate rules using the procedures of the Administrative Procedures Act, the FTC's rulemaking process is laid out in the Magnuson-Moss FTC Improvement Act. Congress established the Magnuson-Moss rulemaking procedures in the 1970s specifically to be more rigorous than the APA process, in part to provide affected industries the opportunity to present arguments in an evidentiary hearing. The FTC must base any rule on that hearing record, and substantial evidence must be presented to justify it. I'm concerned that any significant change to this process would not allow for such careful consideration before rules are finalized. Congress set up the Magnuson-Moss process to be intentionally deliberative, but Congress also has been highly effective in enacting consumer protection legislation on specific issues and providing the Commission with APA rulemaking authority in those cases where it is warranted, such as the Do Not Call Act. I want to thank all our witnesses for being here today, and I look forward to their insight and expertise on how consumers can be best protected. I'm particularly interested in hearing if there are any holes in the current law which prevent the FTC from pursuing bad actors, and whether or not additional regulation would be effective in deterring unscrupulous lenders and others. If the testimony and the evidence we receive lead to the conclusion that the Commission should be doing more, including regulating entities that it currently does not, I stand ready to work with you, Mr. Chairman, to develop the appropriate legislation. Thank you, Mr. Chairman, and I yield back.
The Chair thanks the gentleman. Now it is my privilege to recognize the Chairman of the full committee for 5 minutes for the purposes of opening statements. The gentleman from California, Chairman Waxman.
Thank you very much, Mr. Chairman. I want to commend you for holding this hearing and the fact that your subcommittee is taking a close look at consumer protection in the area of credit and debt. This committee has an important role in ensuring that consumers are protected from unfair, abusive, and deceptive practices throughout the marketplace, including the credit market. And I'm pleased to join you in welcoming the new chairman of the Federal Trade Commission, John Leibowitz. Congratulations on your appointment. I look forward to working with you on this and other issues before our committee. The current financial crisis has brought to light a host of schemes that have hurt both individual consumers and the economy as a whole. Mortgages that required no money down and no proof of income or assets, payday lenders who charge 500% interest for a short-term loan, companies that take money from individuals based on false offers, or they offer to fix a credit report or save a home from foreclosure. These are schemes, and they're allowed to happen because of a fierce anti-regulatory ideology that was prevailing in at least the last 8 years. The philosophy was that government was the source of the problem, that it posed an obstacle to success, and that it should be slashed wherever feasible. This was the ideology that led to FEMA's failure during Hurricane Katrina, billions of dollars of contracting abuse at the Defense Department, and a food safety system that could not keep unsafe peanuts and spinach off the grocery shelves. The agencies of government responsible for protecting our financial system and Americans' hard-earned assets also suffered under this ideology. There was a feeling that government should step aside, that markets should be allowed to work with little or no regulatory intervention. Well, now we have an opportunity to move beyond the flawed system of the previous 8 years and strengthen consumer protections across the financial system. Today's hearing focuses on the Federal Trade Commission, which plays an essential role in overseeing consumer credit. An aggressive and rejuvenated FTC could prevent unfair and deceptive practices before they become commonplace, and it could use its enforcement authority to deter fraudulent schemes. I look forward to working with you, Mr. Chairman, and the members of this committee to making sure that the FTC has the authority, the resources, and the will to be an aggressive consumer protection agency. And I yield back the balance of my time.
The Chair thanks the Chairman, and now recognizes the gentleman from Pennsylvania for 2 minutes for the purposes of opening statements. Mr. Pitts of Pennsylvania.
Thank you, Mr. Chairman. Thank you for holding this important hearing. on the role of the Federal Trade Commission in protecting consumers of credit and debt. I think we all agree that we need to ensure that strong consumer protection measures are in place. The recent housing and the credit crises our country has faced has made that abundantly clear. We must do this prudently, though, avoiding duplicity and jeopardizing processes that work well. And this is why we should examine legislation already in place to see if it has been successful in protecting consumers. While there may be room for improvements in our consumer protection laws, we should also consider that a complete overhauling of legislation may actually force negative and overly burdensome requirements on those who are being truthful and honest. Again, we all desire effective and efficient enforcement of consumer protection laws, and it's my hope that this committee moves forward in a wise, careful, and deliberative manner, and I look forward to hearing our distinguished witnesses today, and thank you, and yield back.
The chair thanks the gentleman, and the chair now recognizes the gentlelady from California, my friend, Ms. Matsui, for 2 minutes for the purposes of opening statements.
Thank you, Mr. Chairman. Thank you very much for calling today's hearing. I applaud your leadership on this issue. I'd also like to thank Chairman Leibowitz for being here today with us and congratulate him also. In today's economic recession, many families in my home district of Sacramento are really struggling to make ends meet. I've heard countless stories about people struggling to keep their homes, their jobs, and their way of life. As we all know, the housing crisis has had an unprecedented effect on our economy. The rising unemployment will cause even more Americans to face foreclosure. California, and in particular my home district of Sacramento, has been greatly impacted by the foreclosure crisis. Many of my constituents were victims of predatory lending and were steered into high-cost, bad loans. Now, many of these homeowners are seeking assistance in modifying their loans to more affordable loan terms. However, that has been a serious issue for many. In some cases, their original loan company is not in business, or in some cases, their lenders or servicers are not being responsive, leaving struggling homeowners feeling desperate to save their homes. As a result, many have been tricked into contacting scam artists posing as so-called foreclosure consultants or their so-called agencies to save their homes. These scams are costing thousands of dollars in false promises to struggling homeowners. I'm a member of the Sacramento District Attorney's Foreclosure Task Force, which is charged with cracking down on mortgage fraud. Many of these unfortunate scams have been well documented in my district. It is clear that consumers are not being properly protected from these shameful, unacceptable practices. We're here today to determine what more the government can and should do to stop these abuses from occurring today and in the future. I thank you once again, Mr. Chairman, for holding this important hearing today, and I yield back the balance of my time.
The chair thanks the gentlelady. The chair now recognizes the ranking member of the full committee, my friend from Texas, Mr. Barton, for 5 minutes for the purposes of opening statements.
Thank you. And I haven't forgot about that cowboy hat, Mr. Chairman.
I thank you very much.
It's on order.
All right.
The hat's in the mail.
The hat's in the mail. All right.
Thank you for this hearing today, Mr. Chairman. It's titled "The Consumer Credit Debt, the Role of the Federal Trade Commission in Protecting the Public" is an important one. As you know, the subcommittee in the past has explored a multitude of consumer protection issues. We've looked into data security, spyware, spam, and children's online privacy. We've inquired about how Social Security numbers are used. We've investigated calling cards and also telemarketing. These areas are important, and it's fitting that today we are considering consumer protection, particularly given our current economic environment. The fraud in consumer credit is considerable. Its ramifications beyond those suffered by the victims. The fallout often damages the businesses with whom the consumer interacts, and it nearly always harms consumers at large. Losses reach into the millions of dollars every year, and the cost is borne by all of us. We know that the FTC is a strong advocate for consumers, policing the activity of those fraudsters who seek to take advantage of consumers in a most repugnant way. I'm interested today to learn what the chairman, Mr. Leibowitz, has to say about the tools that his agency has in its toolbox. how it complements the actions of sister agencies with similar authority and the state's attorneys generals, and what additional tools, if any, the Commission needs. Let me add a cautionary note, however. I support efforts to strengthen the Commission's authority where necessary. I'm aware, too, that several stakeholders believe the Commission's authority must be strengthened by eliminating the rulemaking requirements of the Magnuson-Moss Act of 1975 in favor of the Administrative Procedures Act. As we move forward in this debate, I would ask yourself, Mr. Chairman, and the members of this subcommittee to remember the reasons the Congress imposed the Magnuson-Moss requirements in the first place. The FTC oversees an enormous jurisdiction. Its rules reach into innumerable industries and affect every commercial main street in the country. Given the breadth of that impact, Congress believed that the Commission should take more than 180 days so that it could carefully consider its broad, sweeping rulemakings and the comments generated by that consideration. We still have the power here to permit the FTC to sidestep the Magnuson-Moss Act when necessary and permit rulemaking under APA where it's appropriate and necessary. This is an ability this committee has never had a problem utilizing when we found a situation that warrants it. Again, thank you, Mr. Chairman, for holding the hearing. I want to thank our witnesses, and I look forward to reviewing their testimony.
The chair thanks the ranking member. Now the chair recognizes the gentleman from Georgia for 2 minutes for the purposes of opening statement, Mr. Barrow.
I thank the chair. I'll waive an opening.
The gentleman desires 2 minutes in addition to the 5 minutes that he's granted for questioning. So granted. The chair now recognizes my friend, the vice chair of the subcommittee, the gentlewoman from Illinois, Ms. Schakowsky, for 2 minutes for the purposes of opening statements.
Thank you, Mr. Chairman, for holding this hearing, and congratulations to you, Mr. Leibowitz. We're glad to have you here. The repercussions of years of irresponsible mortgage lending continue to unfold. According to the Center for Responsible Lending, there have been nearly 550,000 new foreclosure filings since 2009 began, 6,600 each day, or one every 13 seconds. We were trying to calculate how many since this hearing began. It's about more than 100, and every 13 seconds yet another. In my state of Illinois, more than 100,000 families are projected to lose their homes to foreclosure this year, and this administration, this Congress are obviously taking steps to mitigate this crisis and ensure it never happens again. But to do that, I really think we have to ask, how did we get here? We're here not just because the banks were a problem, and it's not just bank lending that's responsible for billions of dollars worth of bad loans that now must be dealt with in order to put our economy back on track. Lending by non-bank entities has exploded in recent years, and a major factor in today's financial crisis. Countrywide and other non-bank mortgage lenders are responsible for 40% of the home loans made in 2007 and 55% of the subprime loans. It was the Federal Trade Commission's responsibility to exercise oversight of these mortgages where abusive practices have hurt consumers. Clearly, they missed something. The FTC's authority extends to, as my understanding, auto loans, payday loans, car title loans, and other non-traditional form of credit that often flows through non-bank entities and currency exchanges. Is that we have those in Chicago big time? Okay,
that's correct.
It's a vital role of this subcommittee to exercise oversight over FTC and its rulemaking and enforcement actions over non-bank lenders. And I look forward to working with you, our committee does, to make sure that these improvements are made as we move forward. And I thank you again, Mr. Chairman.
The chair thanks the gentlelady. The chair now recognizes the gentleman from Georgia, Dr. Gingrey, for 2 minutes for the purposes of opening statement.
Mr. Chairman, I thank you for calling the hearing today on such an important issue. It hadn't been examined in depth by this committee since the 106th Congress. I join with my colleagues in congratulating the new chairman of the FTC, John Leibowitz, and I look forward to his testimony. I think one of the most important things as we go forward is to strike a balance. And we heard testimony from our distinguished chairman a little bit earlier in regard to, and I paraphrase, the government during the past 8 years, at least the past 8 years, has taken sort of a hands-off or soft approach to regulation
to the detriment of consumers. Well, in the first 60 days of the current administration, a very aggressive intervention by the government led to over $200 million of egregious loans to AIG executives. So this is, I think, a perfect example of why we need to strike a balance. No doubt both the lenders and borrowers can share the blame for elements of the current credit climate within the economy. And as the economy begins to work toward recovery, one of the basic ways in which we can work in a bipartisan manner to prevent these problems from occurring again is through consumer credit reform. Unfortunately, there will always be bad actors within the financial and credit markets, and this committee hopefully will play a role in mitigating this in the future. First and foremost, credit scams that take advantage of innocent consumers are absolutely shameful. However, before we look to expand the role and the duties of the FTC, it's imperative that we examine how the FTC could be more effective given its current and very broad set of responsibilities. Mr. Chairman, moving forward, we must ensure that there continues to be strict scrutiny and transparency within the rulemaking process at the FTC. The Magnuson-Moss rulemaking structure is unique because in order to ensure transparency, it was specifically designed in the 70s to be difficult to make sporadic, whimsical changes. As we're about to begin this hearing and future deliberation of legislative changes to FTC, I'm reminded of the words of Speaker Pelosi when she took the gavel at the start of the 110th. She guaranteed that it would be the most open and honest Congress in the history of our nation. I hope that this subcommittee takes heed of these words as we begin to modify the role. Mr. Chairman, transparency is everything, and with that, I look forward to the testimony of the Honorable John Leibowitz, and I thank you so much for holding the hearing.
The Chair thanks the gentleman. The Chair now recognizes the gentlelady from Ohio, Ms. Sutton, for 2 minutes for the purposes of opening statements.
Thank you so much, Mr. Chairman, and thank you for holding this hearing. It's extremely important to the people that I represent in Ohio. You know, time and time again, we've learned that sometimes the people who are hurt the most by what is going on out there, are the ones who need our help the most. Today, there are a wide range of financial products advertised to assist consumers in paying off debt and emerging from debt. From payday lending to card title loans, short-term loans with incredibly high interest rates, all but ensure that individuals remain in debt. And these individuals, many of them are my constituents. The American people expect their government to rein in unscrupulous and unfair lending. Last November, voters in Ohio overwhelmingly approved a referendum on payday lenders to end predatory loans. Our referendum capped interest rates, provided borrowers with more time to pay back loans, and prohibited new loans to pay off old ones, which will help to break that cycle of debt. However, we are now learning that these lenders are exploring new loopholes and operating under different licenses and adding new fees, such as inflated check cashing fees for checks they've just printed. And even as our Attorney General, Richard Cordray, and our state legislature and our governor are working to address this situation, the Federal Trade Commission must aggressively act as the American people expect. While I used Ohio as an example, this is a problem that severely impacts people in need throughout our country. And if the Federal Trade Commission does not have the tools or the authority to aggressively protect Americans, then it's our responsibility to strengthen the Commission and restore Americans' confidence. And I look forward to being a part of making that happen.
The Chair thanks the gentlelady. And now it is my pleasure to recognize the gentleman from Louisiana, Mr. Scalise, for the purposes of 2 minutes of opening statements.
Thank you, Mr. Chairman. I appreciate you holding this hearing. Fraudulent and deceptive practices that prey upon consumers are deplorable and shameful, especially during these tough economic times, because consumers are even more vulnerable to unethical scams. We need to make sure that the FTC is fully utilizing the tools they already have available to them, and also ensure that the FTC is working with our local state attorneys general, those people that are closest in many cases to the practices, those illegal and unethical practices that are going on, where we would have an ability to actually go and get prosecutions and root out the things that are being done to take advantage of our consumers in this country. Another critical issue that we need to look at is the coordination with other federal agencies like the FBI, who are also involved in some of these investigations themselves, as well as local attorneys generals, so that we're not duplicating the scarce resources that we do have. So I look forward to hearing from Chairman Leibowitz of the Federal Trade Commission, and yield back the balance of my time.
The chair thanks the gentleman. The chair now recognizes my friend, my colleague, my classmate, the gentleman from Texas, Mr. Green, for 2 minutes for the purposes of opening statement.
Mr. Chairman, thank you, one, for your friendship over the last 17 years, but I thank you for holding this hearing on the consumer credit and protection, debt protection, and to look at the role that the FTC should play. I'd like to welcome our new FTC Chairman, John Leibowitz, and congratulate him on the new position as the chair of the commission, and look forward to working with you. The FTC is important all the time, but in this day and time, it's even more so. As a primary federal agency that enforces consumer credit laws at entities other than banks, thrifts, and federal credit unions, the FTC has broad responsibility regarding consumer financial issues in the mortgage market, including those involving mortgage lenders, brokers, and servicers. The FTC enforces a number of federal laws governing mortgage lending, including the Truth in Lending Act, the Home Ownership and Equity Protection Act, and the Equal Credit Opportunity Act. The Commission also enforces Section 5 of the Federal Trade Commission Act, which more generally prohibits unfair and deceptive acts or practices in the marketplace. That is probably one of the most important that we can deal with. In addition, the Commission enforces a number of other consumer protection statutes that govern financial services, including Consumer Leasing Act, the Fair Debt Collection Practices Act, the Fair Credit Reporting Act, the Credit Repair Organization Act, and the privacy provisions of the Graham-Leach-Bliley Act. I also have particular concern about non-traditional loans, such as payday loans and car title loans, which can carry enormous interest rates and fees. In 2006, Congress acted to cap payday loans made to military personnel to a 36% annual percentage rate after payday loans grew 34% to reach a total of $500 million the previous 2 years, and a figure that has doubled since 2002. In an economic climate such as one we're in today, where credit availability is shrinking, consumers may be more inclined to turn to these options, which are much less regulated, and therefore the potential for predatory practice is much greater. In recent months, the FTC has taken significant steps to protect consumers and crack down on scam artists by going after internet payday lenders, alleged mortgage foreclosure rescue companies, and companies claiming they remove negative information from the consumers' credit reports. I look forward to hearing what other actions the FTC is making to protect consumers, what tools it may need from Congress, and what the rest of our witnesses believe could be done better to protect consumers in today's volatile economic environment. All told, this gives the FTC broad authority to go after those predatory practices, but Congress may need to act particularly to give FTC authority to issue rules under the Administrative Procedure Act. Again, Mr. Chairman, thank you for calling the hearing, and appreciate the opportunity.
The chair thanks the gentleman. The chair now recognizes my friend from Florida, Mr. Stearns, for 2 minutes, for the purposes of an opening statement.
Good morning, and thank you, Mr. Chairman. Welcome the new chairman. Mr. Leibowitz has been on the FTC as commissioner, I think, since September '04. So we have someone, Mr. Chairman, and my members, who's experienced and can help us out, who's seen some of the problems and some of the accomplishments. Obviously, as members have talked about, the current financial situation and housing crisis has brought a lot of relevant consumer protection issues to the forefront, and we need to see how much more authority we should give the Federal Trade Commission. Something that no one's mentioned is perhaps giving them more jurisdiction over the banks, the credit unions, and the thrifts that my colleague from Texas mentioned they do not have jurisdiction over, and of course that's 75% of the credit cards. So I think the people across the hall here will probably not like that, but it would fall in their jurisdiction. I think it's something that we should not discuss. The FTC has authority, but as I pointed out earlier, it's sort of limited because 75% of the credit cards go through credit unions, banks, and thrifts. But they can issue and prohibit unfair and deceptive acts, particularly dealing with advertising. The FTC's stated goal is to protect consumers at every stage of the credit life cycle, but both the FTC and consumer protection groups acknowledge that more can be done to protect consumers. And I think with his over 4 years' experience as a commissioner, he'll certainly have some ideas that could bring it to bear on this problem. The FTC has taken more aggressive action, I think, more recently against companies such as internet payday lenders and credit repair companies who purposely deceive consumers. But the issue of whether the FTC should expand its jurisdiction, as I mentioned earlier, is still up in the air. Should be something of a consideration. But I look forward, Mr. Chairman, in a bipartisan manner to see what we can do to help the Federal Trade Commission, and I appreciate you having this hearing. Thank you.
Chair, thanks, gentlemen. Now, all the members of the subcommittee have had an opportunity to issue opening statements.